Are the Fed rate hikes working? You bet they are. PPI numbers came out this week. Year-over-year numbers moving in the right direction.
Like a step in the right direction. It's hard to believe.
Producer price index numbers came out this week, and they are down year-over-year from 8.1% to 7.4%. So that's 0.7%, which is heading in the right direction. The core number, which strips out food and energy prices, right now is down another 0.7 as well. Everything heading in the right direction. The Fed rate hikes are working. It is starting to bring inflation down, and they will be meeting next week to talk about that. And how will that affect the bond market? We'll let you know. Because inflation has been the headline in the economy right now, and whether or not we do head into a recession, there is more inflation numbers coming out next week. We have consumer price index numbers. The Fed obviously hoping that is going to go down as well. We'll be keeping a close eye on that, and I will report back next week on those numbers. Next week on Wednesday, the Fed will meet, and they will adjourn on Wednesday and come out with their statement. The hope is they're only going to raise 50 basis points. If that happens, that could be bond friendly. Interest rates over the last month, we have seen come down almost a full percent. Right now, we're looking at an average 30-year fixed at 6.25%. That's down from about 7.25% a month ago. So rates are trending in the right direction. We need some good bond-friendly news. I think we'll get that next week, so stay tuned. Bond investors will be looking closely at the tone, whether it's hawkish or they're hoping for less hawkish when it comes to rate hikes in the future. So when they adjourn next week on Wednesday, they'll be listening closely to the rhetoric coming from Chairman Powell. A lot of support right now for mortgage-backed securities. They're running at the 100-day moving average. The 10-year bond at 3.4 to 3.5 right now, trading in that range, which is great news. It was as high as 4.2% over the past couple of weeks. So rates are moving in the right direction. How does that help housing? Well, housing prices are down a little bit right now. With rates dropping in the 6.25 range, it's a great opportunity to take advantage of the housing market. Sellers are willing to give concessions. There's contingencies that are back in place. It's a great time to get the house now. Next year, we can worry about the rate. Now is a great time to buy. I hope everybody has a great week next week. I'm Jeff Zuloff, and that's your Mortgage Minute.